Good evening, viewers. The best-selling author of Rich Dad, Poor Dad has just issued his most terrifying financial warning yet, and even his critics are starting to pay attention. Robert Kiyosaki, with his 2.4 million followers, is predicting that millions will be wiped out financially, while gold rockets to an almost unthinkable $25,000 per ounce. While his doomsday predictions often seem extreme, major institutions like UBS are now raising their own gold forecasts, suggesting there might be more substance to this warning than many realize. Well, tonight, Noble Gold Investments founder Colin Plume, he joins us again to analyze whether Kiyosaki's shocking prediction represents financial fantasy or mathematical inevitability. With gold having not even reached its inflation-adjusted 1980 peak yet, and the dollar having lost 88% of its purchasing power since, well, when Nixon took us off the gold standard back in 71. So the question isn't whether Kiyosaki's crazy, it's whether he might actually be right. Colin Plume, welcome back to the show.
Thanks, Gary. Yeah, it's a bold prediction. I think there's a few things that could get us there sooner than later. I think the first thing to keep in mind is that everybody thought $3,000 gold was crazy too,
Yeah.
and it broke through that pretty quickly. And even with all the turmoil in the markets that we've seen in the equity stock markets this year, gold is still up over 12% this year. In the last 18 months, it's close to 40% returns in the gold market. So nobody really thought these numbers were realistic also. So it's hard to say that we couldn't hit that $25,000 number for gold. The first thing that I look at is the Basel III banking laws. So Basel III is international banking laws. They came out 3 years ago, and July 1st is when one of the parts of the Basel III will go into effect. And in essence, for institutional banks, gold as an asset will go from a tier 3 to a tier 1 asset. So tier 3 would be a more riskier asset, but a tier 1 asset would be a more conservative asset, like keeping cash. So gold is now going to be deemed for big institutional banks like Bank of America and all these big institute, Chase and Wells Fargo. It will be seen as an asset that they would want to have on their books. So it moved to a tier 1 asset. So in July, and that'll go into effect July 1st. So that's a pretty bold change. So institutional banks are going to want to hold gold. They're going to want to keep gold in their reserves. They can use it to leverage. They can use it to barter. They can use it in a million different ways. So now, central banks have been buying 1,000 tons of gold for 3 years in a row, which is unprecedented. And now you have institutional banks jumping into the market. Now, the important part of that Basel III law is that they can't buy derivative gold. It actually has to be real gold. They have to actually have it stored somewhere. It's not a contract, or it can't be like a gold of gold stock or something. That they actually have to own physical gold. And so I think that also is pretty telling, that the international banking community is saying, yeah, we know there's all these derivatives of gold that you can buy, but if you're going to want to hold it as a bank asset, you're going to have to own the real thing.
So, Colin, Kiyosaki's literally, he says in his tweet that millions of people will be wiped out financially. Is this just fear-mongering, or does he have a point?
Well, we're starting to see it already. If you look at just this year, you look at credit card debt has hit an all-time high. You look at what's happening in, defaults defaults of car loans is at an all-time high. So all the consumer debt issues are coming to fruition. So if you see people defaulting on their cars, we've also seen mortgages defaults have hit all-time highs across the country. People are not able to pay. So you have all these debt assets that people own, and they're not able to pay them. A lot of the payday loan companies are having issues. People aren't paying back those loans. So you're starting to see what he's talking about. Everybody's in a tremendous debt bubble. So you have the consumers, the individuals that are in a debt bubble, and then You also have the, obviously the government is $37 trillion in debt.
Yeah.
And then Moody's downgraded us, the US, about 3 weeks ago. They downgraded our credit, and they downgraded our credit specifically because they said we haven't dealt with our credit issue and that we continue to spend more than we bring in. The last time we had this issue where we got downgraded credit was 2011. So, I mean, I don't think I don't think what he's saying is not that far off base. It's just happening slowly. If people they can't have their car anymore, they have to turn in their car, and they're not going to be able to afford their mortgage, and they're not paying their credit card. I mean, yeah, I would say that people are going to be wiped away of some of the assets that they have, and they're going to be in this debt bubble that they can't catch up with. So I don't think he's far off. It's slowly starting to happen, and the data's there. I mean, this isn't stuff that I'm
Well,
telling.
okay, so even if Kiyosaki sounds extreme, UBS just raised their gold forecast at $3,500 an ounce,
Right.
right? So, like, what mainstream factors are driving these increasingly bullish precious metal predictions?
Yeah. So last week, and we've seen tremendous amount of bond selling, treasury bond selling is as an all time high, and that's why you've seen the 10-year. If you look at the 10-year treasury, the 10 years really started to creep up. The reason the 10-year is creeping up is because people aren't buying bonds, right? So if people were buying bonds in the US, the price would drop. That's just kind of how it works in terms of the bond market. So the fact that the bond market, they're selling off, which means institutional investors, China, they're not re-upping their bonds. They're taking that money from the bond as it comes due, and they're buying gold and they're buying other assets. So you see that happening too. And we live on these bonds. This US, we need people to continue to buy these bonds. And what's really scary for us is like
Well,
we're
yeah,
getting.
you're talking about the bonds, and I want to take a look at the tweet because that's what he's referencing. You're referencing. He said, "This is what happened yesterday. The Fed held an auction for U.S. bonds, and no one showed up. So the
Correct.
Fed quietly bought $50 billion of its own fake money with fake money." He
Right.
says the party's over. Hyperinflation is here. And then he goes, millions of young and old will be wiped out financially.
Yeah.
So the Fed quietly bought $50 billion of its own fake money with fake money.
Because they don't want a crisis. So they had to buy it. And this is what Japan has been doing for a long time, right? They buy their own bonds, because if they don't buy their own bonds, then the bond yields will just continue to skyrocket and skyrocket. And to get, I mean, the amount of.
Colin, this is freaking crazy.
Yeah,
I mean, they're printing the money and buying. I mean, it's like
it
it's
doesn't
the
make
most
sense.
absurd thing I've ever heard of.
Well, and also if you think about it, we are supposedly the safest bonds in the world, right? I mean, we're the world's reserve currency. So if we're the safest bonds in the world, why did nobody show up to that bond auction? That's
Wow,
the thing
that's
you really.
scary.
So in essence what they've done is what I predicted about a year ago, is they're doing quantitative easing. They have to buy those bonds. If nobody buys bonds, that means 10-year treasuries could go up 7, 8, 9, 10%. And that means 10-year treasury is tied to, like, let's just say simple terms, like our mortgages. So if the 10-year treasury goes to 8 or 9 or 10%, that means the 30-year mortgage would be double digits. And so just imagine what would happen to the real estate market if your 30-year mortgage, the new mortgage, the rate was 10, 11, 12%. That means the whole real estate market is worth probably 50% lower than where it is today, if not more. Because we're already seeing that, right? Because we're not seeing movement in the real estate market because interest rates are in the high sixes and sevens. If the 10-year continue, the 10-year is what ties our 30-year mortgage. So if they don't, at some point here, the government will have to continue to buy bonds to keep that market going. Because if they don't do that, we will see an absolute collapse of the markets.
They're gonna buy it back so they keep the market going. That's what you said. It's really just a freaking Ponzi scheme.
Right, exactly. Yeah. And that's the reason there's so much buying of gold. That's why we're seeing this tremendous buying of gold. And yeah, we've seen, the last 2 to 3 weeks, you've seen a little bit of a sell off and some profit taking. But if you really look at the big picture of gold, it's there's no counterparty risk to gold. When you own gold, you own it. That's why the ECB and the Basel is telling you not to buy derivative gold. And you and I have talked about it for years. It's like how many pieces of gold are backing up GLD and all these contracts. Well, I mean, listen, I don't know the exact number. I've heard 200 to 1 or 300. I've heard all this stuff, and I don't know. I'm not doing the audits, but I can tell you that the European Central Bank, in this report that just came out a few weeks ago,
Yeah, we've got it on the screen right here.
this is
This
their
is from the European Central Bank direct.
this is their 5 biggest economists. So they're in the beginning of this, and anyone that calls Noble Gold, we can send this to you too and give you some good information. But in essence, what these economists have said, they tell you the reasons to buy gold. They say, listen, it's a limited supply, it's in high demand, there's no counterparty risk. They tell you all the reasons. Then later in the article, they talk about how much. That's where they talk about why you should buy gold. And they also talk about my favorite is that it doesn't pay a dividend. That was always the argument against gold. But listen, if you're analyzing the last few years and you're looking at returns of close to 20% a year, like nobody cares about a dividend when you're making 20% returns.
Yeah.
But then when you get farther into this, they show you the amount of investors that are actually taking possession of gold. If you go a little bit lower, Gary, the next one talks about this is COMEX, future contracts, and this is physical delivery. So if you talk about that, and they were saying that in November of last year, the derivative market went crazy. People were buying derivative gold in November. The amount was spiked right after the election, and you saw this asset managers just gobbling up derivative gold. So they're like, okay, the gold market starts to take off.
And just to be clear for our viewers, that's just paper gold.
That's just paper gold. So yeah, so these asset managers, it says right there, 58% of asset managers would expect gold to be the best performing asset class in a full-blown trade war. So in November, they expected the trade war, and so they bought gold. But then the interesting thing, and they were right, but the interesting thing is then, because of what happened in the London exchange and what happened that people wanted to get their contracts, and they said, well, you have to wait for your gold. Then the amount of people that wanted these big institutions that wanted it skyrocketed. And if you go down a little bit lower, you can see in the chart, it talks about the amount of investors that wanted to turn that derivative gold into actual gold. And if you look at it, it just spikes all the way up. They really wanted physical delivery of their gold. Yeah, it's right there.
Is that the spike you're talking about right there?
Yeah, right there. If you look at the chart, right there, you see that blue line. That's this year. That's deliveries. So you go back the last 5 years. So look at that. So it's like,
wow.
So the whole time people are buying derivative gold and they're saying they're okay with it. But then the risk, that red line is kind of the risk meter, the EPU. So the risk meter is saying, we should take possession of gold. And then you see early in 2025, it's unprecedented the amount of institutions that decided to take possession. And you can see it right there in that blue line. It's just an unbelievable spike. And the last time we saw it doesn't get near there, but the last time we saw that was in 2020. A lot of people wanted physical possession. And then people were in a malaise. They thought, oh, it's okay. We don't have to have possession. And then in 2025, it's sort of like everything's happening at the same time. Like no one's trusting.
Like what? Yeah. Why? Why is this suddenly happening?
Because I think you had a few things. You have this Basel law that's coming into effect in July of this year, right? And that Basel law is Basel is the international banking, the group that makes all the laws for all the banks. They're saying in July, if you want to be a bank, an investment bank, you have to have physical delivery. And then the ECB is like doing this report basically saying, and in essence, they say it in here, they say that the derivative market is overexposed, that, you can't focus on this, that you could, in essence, these institutions that are guaranteeing these contracts could have substantial losses if everybody takes delivery of gold.
It's like a run on gold.
Correct. Yeah, and that's what they're telling people right now is that this, and you see it right there. I mean, this would be like Jerome Powell saying that there's a run on gold. Now, he would never say that because, he's protecting his interests, obviously. But ultimately, yeah, you see the derivative market just really skyrocket. And then these institutions go one step farther and go, I'm not okay with the derivative anymore. I actually want the physical gold delivered. And
That's
the
a recipe for disaster, man.
It absolutely is.
I mean, it's worse than an actual run on the banks that the consumer would go and withdraw their cash. This is the backbone of the global banking system, gold.
Right. And there was a lot of physical buying earlier this year. And I think we talked about it. We were like wondering if it had anything to do with Fort Knox. Maybe they were trying to fulfill Fort Knox, which, by the way, even to today, they still haven't done that public audit.
Yeah. You know what? We just covered this last night, and all of a sudden, like, Musk and Trump, totally silent. They were banging the drum about auditing Fort Knox, and all of a sudden, nope, nothing. They don't want to talk about it. It's not happening. Radio silent. What the hell's going on there?
Yeah, well, and that's quite scary to me that they are not willing to do it. They think the audit would cost a few $1 million, let's just say, in costs, like hard costs to have people go in and do the audit. Like, to do a few $1 million audit if we have what we say we have, it should be like 800 billion. Like, why wouldn't we spend the few million to reflect the fact that we have this amount? And also, I think the other thing that didn't make sense is, like, why didn't they bring the gold price up to today's gold price? Because I think, as we talked about, the gold that's in reserve, they still have it valued at $42 an ounce. So part of the call for this audit was, to bring the price up to today's value, which would be 3,000 or 4,000, whatever you decide to do. When I first started talking about this audit potential, I was saying that they should probably do it at $4,000 an ounce, because that's where we're going to get to. And, it looks like we're going to get there even faster than
But what happened if it's not at 4,000 now, but what happens if Fort Knox, they go in, they do an audit, hypothetically? I mean, it doesn't sound like they're going to, but then they just set the gold price at each one for 4,000. That's their buy. I mean, what happens to the gold market at that point when frickin' Fort Knox and the United States government moves that number to 4,000?
I think that would make the most sense, because based on how much gold they supposedly have at $4,000 an ounce, that would be $1 trillion in gold. What I'm
saying is, like, what would happen to the market itself?
I think you'd see a few things. One, it would send a message that derivative gold is not where you want to be, obviously, and we're seeing the institutions already believe in that. I think you'd see more audits. You'd see more people wanting their physical gold. And it would also send the dollar into sort of a tailspin, right? Because we're acknowledging that, as a government, this is one of the few assets that we actually have that doesn't have any debt behind it, right? I mean, that's the thing that Kiyosaki always talks about. That's why he loves gold and silver. He talks about it so much, is that he believes that you should have assets that don't have any debt and that you own by yourself. And that's the great thing about owning Noble Gold as the CEO, is that I feel confident. We don't do any lease gold. There's a lot of companies doing lease gold stuff or derivative options. You own it by yourself. We're not like a fund. So I can sleep great at night, because I know that everyone that bought gold and silver from us, they own it. They've obviously done amazing. We've had some incredible returns with some of our clients. A lot of 7-figure profit over the last 12 months, and I feel good that they actually have possession and it's theirs, so they don't have to worry about me, or if we go out of business, let's just say, for any reason, it doesn't matter. Like, they have their gold. So
yeah,
everyone.
Well, speaking of going out of business, I mean, we almost went out of business when we got demonetized, and I had all my physical gold with me, and I was able to take that physical gold and I was able to cash it in, and I got market price for it. And I mean, the reality was this was when it was around like a little over 2,000, I think, an ounce. And
Yeah.
now I'm looking at these prices as they go up. I'm like, my goodness. Like,
But you know what? The great thing, Gary, is that you had that asset, right?
exactly.
Right.
Yeah.
That's the most, and I think that's the thing that I've always talked about with people is that, yeah, things are going to come up, right, in your life where you may need to fix your roof, or you may need to buy a new car, or, maybe you want to send your kid to college,
Or
you
maybe you
know,
need to save your YouTube channel.
or maybe you need to save your YouTube. Exactly. Or maybe you need to save your YouTube channel. It's like, or put it in your business. Like, I mean, that's what in essence you did, right? You put it
Yeah,
back in your
exactly. Yeah.
business.
Yeah.
You never know what's going to happen. But if you had all your money tied up in real estate, or if you had it all tied up in the stock market in 2022 when the market was down 25%, that's the worst time to sell those things, right? And so I think your story is a great example of you had another asset that you could use to get out of a hole and sustain through all the things that happened to you through YouTube and all the censorship that happened, and you were able to survive. And I
Yeah.
know because it was a tough 2 years, and you were in a very difficult position, and now you're monetizing again, and think the world's in a much better place. But sometimes you need that money, you need access to capital, and a lot of people are using the gold that they bought from us in that similar situation.
Yeah. No, it definitely saved our butt and kept the channel going. We were able to continue paying our crew, pay the bills,
Correct.
and that's what you got to do sometimes.
Yeah.
Um, but I mean,
Yeah.
thinking about gold going up to $25,000 an ounce, that's what Kiyosaki's saying. I think he's kind of crazy, but I mean, if it even did reach half of that target, what would happen to silver and that, the historical gold to silver ratio?
Yeah. So silver's at 100 to 1 right now. So, which is unusual. Usually
Yeah.
silver's trades about 60 or 70 to 1 would be the normal ratio. If you go back the last 100 years, it's about 60 to 71. So yeah, silver would be sitting at, in that scenario, silver would be sitting at $600 or $700 an ounce. And today we're sitting at $32 an ounce. So yeah, I think, and I talk a lot about that in my book as I go through, a lot of the usage of silver that's growing. And I really talk about the story of silver because listen, gold is moved but I do think there's an opportunity for silver for people that haven't acquired it. It has been the slow horse. It's doubled over the last 5 years, but it obviously hasn't had the growth that gold's had. But I think that if you look at the next, 5 to 7 years, and you look at what are some of the options that silver could do, I mean, from solar panels to electric vehicles to, I mean, even the government last year, our government, they buy gold and silver every year. They bought $400 million in silver and they bought $100 million in gold. They needed more silver than gold. So, and this was just for industrial use, just for the government to run and the Defense Department. So I think there's a pretty telling story with silver. So I think, and I talk a lot about it if people call in and want to learn more. But I think we're about 3.5 years into this recent bull run in metals. If you look at what happened in 2001 after 9/11 to 2011, that was a 10-year run. I think we're going to go on a similar 10-year run, and I think we're right in the middle of it. So yeah, Kiyosaki's 25,000 might be aggressive, but I definitely think the $5,000 number for gold is a very realistic one. If you look at the buying of gold over the last 6 months, the retail market is just jumping in. So you have all these buyers. You have the central banks. Now you have institutional banks July 1st that are going to buy gold. And now the retail market's starting to catch up and buy gold. And then hedge funds. I have a really good friend that works for a hedge fund. He always talks about gold and they always buy gold. And this is a hedge fund. And I always ask, like the first time I said, it doesn't make sense. Why is a hedge fund? Don't you guys go for these, crazy returns? And aren't you looking for the next Nvidia? And all, I asked him all these stuff. And aren't you doing puts and calls? He's like, yes, but we're also a hedge fund. Like the other
Ah,
thing is we want to be hedged. Like part of his fund is that when the market's down 20%, so when the market was down 22%, in 2022, they weren't down, they were even. That's so as with large investors, if they're buying different funds, part of the fund that they're going to buy is the one that's not going to lose money. And so the interesting thing is he's such a bull on gold, and you would never expect a hedge fund to be such a bull on gold, but they are,
Wow.
and it's quite interesting.
Well, that brings me to my next question. How should average investors balance the potential for dramatic precious metals gains against the risk that such extreme scenarios might devastate other investments?
Yeah, I mean, I think that's you have to look at it in terms of what is your level of risk in your portfolio and how close you're to retirement and all these things. And listen, every investment has inherent risk behind it, but what we're starting to see is a lot of people from all ages and all walks of life, and even younger people, people that you would think would be more risk adverse buying gold. Like our average buyer has dropped by almost 10 years in the last 2 years. We were typically in the 40 to 50 range and up, but we've seen it go much younger because young people today are also quite concerned because it's so hard for them to save. And so they don't want to lose money. So they are looking for the everything hedge of gold also. They just don't want to lose. They don't want to have that 20% down year. So you're seeing a lot of younger buyers. So listen, we can work with anybody, you have any IRA, any 401k, old 401k. If you have cash in an account, you're not happy with the return. We can help you get into physical gold. And I'll say, just like your scenario, gold is liquid. So, if it goes on another, if we have 6 more years in a bull run, like I anticipate, then at any point during that, if you need money to save your business or buy something or do whatever you have to do, you can get access to it. And I think that's the nice thing about people that have really truly diversified. And that DeSantis bill that just happened yesterday too. That so gold and
Yeah, I
silver.
wanted to ask you about this. I just was, looking up on X to see the latest gold price, and then this thing pops up.
Yeah,
DeSantis signs a bill to make gold and silver legal tender in Florida. What the hell is going on there?
yeah. So basically, you can use gold there to buy goods. I mean, really, the reason they do it is like Utah was way ahead of this. Is that Utah many years ago started to allow people to pay taxes or anything in gold and silver, and think about how well they've done as a state because of them accepting that. And Florida, I listen. I think they believe in free enterprise, and obviously they want to allow people that people will be able to buy things in that state with gold and silver. But selfishly, I think the state is looking for a good revenue stream because they'll accept gold to pay off any if you have a any kind of bill that you owe to that state, you'll be able to pay it through gold and silver. So
So
it's
this is
it's a good
basically
benefit.
this is a state-based situation where you can pay your taxes or
Correct.
whatever to the state in gold, because it says make gold legal tender in Florida. So does that all? I mean, does it also include going to the 7-Eleven
Correct.
and buying a Red Bull with
Correct.
a tenth of an ounce of something?
Yeah, you could buy a lot of Red Bull with a tenth of an ounce of gold. That'd be a lot. That'd be a lot of. You could pretty much buy all 7-Eleven with a tenth of an ounce of gold. You could get chew. You could get
Okay,
all the hot dogs you want.
well let's play this out then. How does that actually function in real life? Because the coins, the legal tenders I've seen that come from the mint, you got, it says like $50 and it's a tenth of an
Right.
ounce or whatever it might be. Um, so the face value of that coin is different from the actual melt
Correct.
value.
Correct. Yeah, it's not
So
going to go
so
based on face
so
value.
play it out. Just play it out for me here.
Okay.
We go to 7-Eleven. We want to buy all the Red Bull in stock, and we bring out this coin that says 50, but its melt value is $600 or whatever. How does that even work at the cash register? I mean, I'm just throwing out this hypothetical.
Yeah, yeah.
But
No, I think and it works in pawn shops all the time, and they do
of
this all the
course.
time. They would have to weigh it and authenticate it to make sure it's real.
Wow.
I think silver makes
Pooh is
more.
going to have to learn a new trade.
Yeah, but I mean, listen, if you're the owner of that 7-Eleven, if you have to take the dollar or if you're going to take a credit, like you would much prefer to take gold and silver, right? I
I
mean,
certainly would.
absolutely. So silver probably makes more sense for that
Yeah.
for a small purchase. But like, let's say you need a new transmission. If you need a new transmission, it's going to cost you $2,000 to $8,000, right? So a gold piece would make sense in that scenario.
Sure.
right? A 1 ounce gold piece. The $50 face value that you're saying, that's on the American Eagle coin.
Yes.
So that coin today is probably worth, $3,400, $3,500.
Right.
So
Okay.
yeah,
Yes. Yes.
you could pay. I mean, listen, you could pay your mortgage with it. You could pay your rent. I mean, it's all going to be acceptable in that state. And I think
That's wild.
the smart money is going to accept it. The smart money is going to want it. I mean, what benefit to you as a business do you have accepting dollars? Yeah, you need enough to pay the bills and survive, but big picture, like think about what happened 5 years ago. Gold was at what, 1600, 1700. Now it's at 3200. If you took everything in gold as opposed to the dollar, you would have doubled your money by doing no work. I mean that's the other thing too, is like, for all these years people would always say like, "Oh, I'm going to buy real estate, I'm going to do this." And I'm like, "Great, okay, but there is work involved." Gold is one of those assets where there's no work. It's just, you just bought it, put it there, and now, you know, we've had plenty of clients that have doubled their money over the last 4 years, and that's outpaced everything. Nothing else has gone up as much, except for crypto, but everything else, S&P, the Dow.
Well, let's talk about that for a second. Okay. Because Noble Gold does deal in crypto.
We have a crypto arm. Yes, correct.
Okay. So, I watched the crypto. I watched Bitcoin. Yeah, I think it just crossed over 110,000 yesterday.
Correct. Correct.
I'm like, let's go, baby. What's going on there?
It's all a reaction to what's happening with the dollar and what's happening in our bond market. I mean, all these things play into it. It's just more.
Well, what about Trump? He's the crypto president, right? He's got all the crypto stuff going on. I mean, that's playing into
I
it,
think
right?
since he's acknowledged that he wants to put crypto in reserve, I think that's the biggest, telltale sign that crypto's going to have a strong market. And so that's why you see people continue to buy it. So yeah, we offer it in an IRA just like gold. We have an exchange that we do it that's protected. It's been around for 4 years. So we also offer that too. So I think, when we started, Gary, 10 years ago, alternative assets, and now alternative assets have become mainstream assets, right? I mean, that's really what's happened since with our relationship of doing this for 10 years.
Yeah.
It's really shifted.
Yeah, it's exciting. It's fun. I mean, yeah, you've been a sponsor of Next News for 10 years.
Yeah.
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 So I got your X account up on the screen. I don't follow you? What? All right, we got to follow you.
Yeah.
Now I'm totally embarrassed. Wow.
Yeah.
I just got called out.
We won't say anything.
X account. Noble Gold Investments, based in Encino, California, provides investors with safe and easy way to buy IRA-approved precious metals, including gold and silver and platinum. So, yes, this is the new offer you got going on right now. The silver bonus, 10-ounce silver flag bar. I did not receive one in the mail, so I don't have a physical version to show you guys.
How did that happen?
Zing! I love you, man.
We'll get you that bar, Gary. We'll get you that bar. Don't worry.
Oh, you don't have to do that. We have a nice picture we show.
Yeah,
but no, if I had one, that'd be cool. That would be cool.
I don't know why you don't have one. You should have one. We'll get it.
I don't know. Maybe my ad manager kept it. Maybe you sent it to him and he's got it in a safe somewhere.
It's happened. I'll make sure the next one. I know where you live, so I'll make sure the next one.
I'm gonna text him and find out. Did Colin ever send you a 10-ounce bar for me?
Yeah, and I hate to say this out loud, but what about your kids? I mean, is it possible that they opened up the package and?
I don't think so. No,
okay.
I don't think so. No,
right.
That's not likely.
Okay,
but
right. Fair enough. If it doesn't say Amazon on it, they're probably not opening it.
Exactly. Colin, it's been great having you here on the show. Do you have any final thoughts for our viewers?
Just say, listen, don't be intimidated. Give us a call. You're going to like talking to people. Everyone's trained by me, no pressure environment. I mean, you know us, thousands of positive reviews. We've sold over $2 billion in gold and silver. Since we've been working with Gary over this last 10 years. So we've done it a lot, but it's something that everybody can do. Don't feel like it's out of range or it's not for you. Give us a call. Let us send you free information. We have like 6 different guides. We have a silver guide, a platinum guide, a gold guide. I mean, you name it. We'll send you all the information and just talk to somebody, ask questions.
Real quick here. I'm looking at this this Memorial Day promo.
Yeah,
Is that still going on? You can get a Trump coin.
it might have expired, but if someone calls today, I will grant them one piece. Is it? Can we extend this? JR, what do you think?
It's not sold out.
If it's not sold out, we'll extend it. I don't know.
Wow, it's 2 ounce. It's a 2 ounce coin.
No, it's a 5 ounce America the Beautiful coin, and then the 1 ounce Trump.
No,
Five 1 ounce Trump coins.
this picture says it's a 1 piece silver America the Beautiful coin for 5 ounce and 5 piece silver Donald Trump coin.
So it's 10 ounces of silver. Yeah. So yeah,
The
if we still
picture-
have it, we'll honor it. If we don't have that exact thing, then we'll replace it with some other.
So they're collecting.
Yeah, the Trump
that's
coin.
cool.
That Trump coin is no longer available. So if we have some left, we'll.
That's too bad.
We'll honor it. Those sold out pretty quickly. So
I could imagine.
yeah, but yeah, we'll anyone that's looking to get information, call us. A lot of good promotions. But yeah, I think there's never been a better time to protect yourself. I think the banks are doing it. Central banks, institutional banks. I mean, that ECB report is pretty telling.
Well, when you showed me that kind of freaked me out. I'm like, wait, the European Central Bank is actually telling people to take physical possession?
Yeah.
Yeah. That's wild. Well, Colin, thank you. Thank you for helping us separate the signal from the noise in what could be the most important investment discussion of our time. This is where you say, glad to be here.
Glad. Yes. Well, I wanted that to sink in. I wanted that. That was
that was the dramatic pause.
Yeah.
Pause for effect.
Yes.
We don't have that cue on the teleprompter like Joe Biden used to have.
Yeah, I was looking for it. I couldn't find my teleprompter, so
that's all right.
Thank you for having me, as always.
Absolutely.
Always good to see you, and great to be on the show today.
All right, thanks, Colin. So whether Robert Kiyosaki proves to be a prophet or a fearmonger, the economic forces he's highlighting are undeniably real. Currency debasement, institutional loss of confidence, and the mathematical impossibility of our debt trajectory aren't conspiracy theories. They're actually measurable facts. And Colin Plume has provided crucial perspective on how to navigate these uncertain waters. While $25,000 gold might seem extreme, the underlying drivers that Kiyosaki identifies could make precious metals essential portfolio components regardless of whether his specific price targets prove accurate. So the question isn't whether to prepare for financial uncertainty, it's how much preparation is prudent. As central banks continue accumulating gold, and even the European Central Bank telling you to buy it, and institutions raise their forecasts, the window for positioning ahead of broader public awareness might be closing rapidly. So we want to thank our sponsor, Noble Gold Investments, for supporting the show. We trust them completely, and you can learn more by going to nextnewsgold.com. You'll find it linked right below this video.